Okay, g'day folks. Welcome back to another update for the S&P 500 and the NASDAQ. Now, charts are hitting resistance and it's been that way for a few days now. Make sure you hit that like and subscribe button before we go any further. That'll be greatly appreciated. Also, reference the +1 videos for a deeper dive into some of the trading strategies we talk about. In terms of the outlook, the US equity markets are trading cautiously. The S&P 500 is facing a more moderate outlook for 2025. Solid underlying fundamentals, but fewer headwinds for a major upside, while NASDAQ is more exposed to growth and valuation risks. At the same time, global growth is projected to slow, and geopolitics, such as tariff, trade, resource supply chains, regional tensions are creating a higher risk macro backdrop. The combination suggests markets may continue to climb, but likely with greater volatility and selective positioning rather than broad, strong rallies. So starting off with the S&P, looking at the weekly chart first. And on the weekly, the price is still above the moving average, and so is the CCI. It looks like a fresh breakout, so we might have further upside to go, according to the weekly at least. But you will notice here we've got a declining highs on the CCI versus higher highs on the price, and that's a bearish divergence. So just be cautious about going too strongly or too heavily long. We always look at the smaller time frames to confirm. So at the moment, cautiously bullish on the weekly. On the daily as well, we've also drawn this resistance up here at 67.52, and it's actually hit that a number of times already, and it's having a bit of trouble breaking through that. You'll notice here the price is above the moving average band, and the CCI has fallen below into that moving average band, so that's a weakening signal. Also notice this contraction of this moving average band on the price. Whenever you see that, that generally means consolidation of price, which is obviously it's doing. But what I'd like to see is the price bands moving wider, like they were here, to get more, I suppose, momentum in the upside in this case. But even back here, you'll notice here on the daily, we did have this bearish divergence versus the price. So just always be cautious of divergence. And in this case, we've drawn a target range. Let me just go back to this period from that high down to that significant low, and that's at 23-38% range. So if this does break below this and continues on a downtrend, we expect it to reach this level, and there's more than 90% chance it does hit that level at the minimum. Of course, it could go a lot further. Now, another thing I want you to notice as well, if I zoom out, what I've done here, I've marked all the major downturns we've had in the past few years, starting back here with the GFC. I haven't got the price, haven't moved it back far enough for that, but they've all had a bearish diversion. So, and these are I've highlighted the major ones. So you can see there, and more recently back here in 2025, we had that pullback as well. So again, we've got higher highs on the price versus lower highs on the CCI. Obviously, if you zoom in, you'll see other smaller range. You can see one there, smaller range divergence throughout the whole period. There's another one there. So at the moment, that's what I'm saying, we might see this starting to turn down at some point as well, possibly in line with the other major drawdowns, price drops we've had. So the daily at the moment is, I'd call it neutral. It's consolidating in that range. On the hourly, and working backwards, we can see here the price and the CCI are still on a bit of a downtrend. So bearish momentum at the moment. And we did have a bit of consolidation back there. You can see they're hitting that resistance. And what we do as well, working backwards, we look for any divergence. And you can see there, lower highs on the CCI versus the same period, higher highs on the price. So it's a very minor difference in terms of incline there and decline there, but that's still a divergence, a bearish divergence. And that looks like it's already hit the minimum level. You can see there it's dropped past the 23-38% range, which is our minimum target. It's bounced just off that 38% range, and it's bounced through there again. It looks like it's probably going to continue on a downtrend. So again, this could go a lot further. We don't know, but at the moment, the widening of those moving average bands is not a good sign. If they start to constrict and the price goes more sideways, then we might see a bit of a recovery. But at the moment, predominantly bearish at the moment on the hourly. Now remember, we always trade in the direction of the higher time frame, which means if you're trading on the hourly or the intraday, you go in the direction of the daily. Or if you're trading on the daily, you go in the direction of the weekly. So it depends what time frame you want to trade. And on that basis, we look at the back test. So what I've got back here, going along from that period around about the 23rd or 4th of April, And here is represented on the 1 hour chart. You would have been going long. Now again, I like to zoom out. You can see there whenever the moving averages start to bend down, from that point, you would have closed out your trades with those bearish divergence. So you don't want to sort of close out too soon. You've got to give it time to breathe according to this strategy. And in this strategy, you'll notice we're averaging down whenever the price is still in a bit of an uptrend with a slight retrace, but we close it out whenever we see a bearish divergence. Or at the very latest, using the daily as an example, if the price breaks into the moving average range, then you close out the trade and you re-enter again on the hourly when the daily breaks higher as well. Now in this case, it's a bit of a tricky situation because the CCI is dropping and it's really fluctuating in that moving average range, whereas the price keeps rising. So on that basis, as long as the price is really clearly above the moving average, you can still take long trades. Again, you've got to follow the divergence on the hourly to be more consistent. But at the moment, I'll probably wait for that to break above the resistance to be more bullish, or at the very least go bullish, but wait for the moving averages on both the CCI and the price to break higher. At the moment, they're on a bit of a downtrend. So the S&P's got a similar pattern to this is the NASDAQ. The NASDAQ's got a similar pattern to the S&P. I've got a bearish divergence on the weekly chart, higher highs on the price versus lower highs on the CCI, and I haven't drawn a target for it yet, still a bit way off before we start seeing a decline possibly, but if that starts breaking below on the CCI, that'll be our first signal of more of a bearish momentum. On the daily, again, it's hitting this resistance similar to the S&P. It's having trouble breaking through that, and you'll notice we've got a bearish divergence as well on the CCI versus the price. And I've drawn a target range for that here as well. Similar to the S&P, I've drawn major downturns we've had recently of bearish divergence. That's on the daily. On the hourly, again working backwards, you can see here we've got pretty much almost a triple top on the price versus declining highs on the CCI. I won't draw the lines there, but you can see very clearly that's a bearish divergence. And similar to the S&P, that's already broken down, so I'll take it from that high. Oops, it's the wrong one. We want to go with the Fibonacci and the Fibonacci retrace. You can see there it's broken down past the 23-38% range, and this one's bounced off the 50% level. And it's currently sitting in that 23-38% range, and it looks like it's got further downside to go, even though the CCI is slightly above the moving averages. So I would say that's going to continue on a bit of a downtrend. Now, having said that, we look at the back test, and again going long here from about the 23rd or 4th of April, indicated here as well on the 1 hour chart. This is the daily on the left, the 1 hour on the right, and again paying attention to the bearish divergence throughout the whole period. Now you'll notice here this major drawdown we had. There was a bullish move here on the price versus a declining CCI high, so that was your first indication of a bearish divergence. And you would have got out there when both the moving averages started to turn down, and you would have got out there holding one set of contracts near that, if you traded all that before that divergence, that drawdown started. So that's how you avoid those drawdowns. And I won't drill into all of these, but you can see there some of these have had a bit of a drawdown, and you possibly would have saved yourself getting into some of the trades in those periods as well. We do a weekly scan of bullish shares each weekend, so coming up on Saturday or Sunday, I'll publish another list of bullish shares, and they're available on the Patreon page, links in the description below. But you can see here, these are a few of the trades we've traded since the 21st of September. It's about a month old now, just over a month, and it's generated 3,600 in Aussie dollars, showing the capital gains in any currency exchange between Aussie US. These are all US stocks, obviously. So dollar-wise, that's what we've returned, trading $5,000 lots. And if you want to look at percentage-wise, that's equivalent to about 9.65% return on the trades. So again, reference the Patreon page, links in the description below for minimal cost to get that list of bullish shares across various regions of the world. Thanks for watching. Hit that like and subscribe button, and I'll speak to you in our next video.